You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-evolving Options Insider Radio Network. All kinds of new wrinkles coming all the time on the plus and the pro side. What are they? Head on over to theoptionsinsider.com/plus or /pro to find out all that good stuff for yourself and a whole bunch more. Of course, if you're happy listening on demand, getting it the way you used to, that's all still there, all still ready and available for you after the fact on your device of choice. And however you listen, make sure you keep hitting us up. Those questions, those comments, we do love to hear from all of you folks out there. Let's see who we're hearing from today. Joining me holding down the MIAX hot seat today, our old friend, Mr. Andrew GIOVINAZZI, a.k.a. the Rock Lobster, beaming in from the dark and stormy shores of Maine by way of a little thing called Option Pit. Mr. G, welcome back to Volatility Views, sir.
It is a pleasure to be here. I am taking the place of Mr. Sebastian, who is once again traveling. He is the traveling carnival barker for Option Pit at this point.
He can't make up his mind. Texas or Chicago. I guess he's coming back to Chicago now, so he's all over the place. Texas, Chicago. He can't make up his mind. Kind of like volatility, as we head right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
right, everybody. Welcome to the Volatility Review, the portion of the show where we do just that. We review the week that was and indeed still is, from about trading and trending and analysis and unusual activity and all sorts of perspectives out there. And coming into Friday here, coming into showtime, seems like the markets are mostly keeping the joy alive from the infrastructure deal. Of course, we had the big, I think it was around $1.25 trillion infrastructure plan finally get the go-ahead over there in D.C. So the markets like that yesterday. Coming into today, they all seem to like it. Coming into the start of the show, it seems like maybe the worm turning a little bit, at least out there in NASDAQ land, because NASDAQ has now turned red ever so slightly. S&P and Dow still firmly in the green. S&P up about 0.25%. Dow up. It was up about 0.75%, a little bit less than that, about 0.7% now. So we'll see how that evolves throughout the show. Is the NASDAQ the canary in the coal mine? Are we starting to hear maybe some of the devil in the details of this infrastructure plan and folks not liking it? Are there more buyers/sellers floating around out there? Who knows what's driving all this madness, but we'll find out as the show unfolds. Come into showtime, though. Man, it has been a Volmageddon, vol apocalypse, call it what you will, across the board on all of the vol products. Spikes coming into showtime was at about 15.25. That puts it down 4.25 points. That's a huge move in spikes in just a week, listeners. That's a lot of juice being wrung out of the sponge. When you're only in the high teens to begin with and you squeeze out over 4 points, that's a lot of juice coming out. Of course, this time last week, we were on the heels of a little bit of a spike as a result of the sell-off, pun intended, of course. And so the question was, would this continue or would this vol come out ever so aggressively? Seems like the latter was the option, the smart way to go. VIX cash kicking off the show is at about a 15.25 as well. That puts it down a little over 4, about 4.5 points, actually. So outpacing spikes to the downside ever so slightly. VVIX, the vol of vol, also coming in. It's about a 105 right now. Remember, it was back up to that pandemic floor level of around 120 on our last show. It was actually north of it. It was 125 last week. So it was down about 20 points from where it was this time last week. So a lot to unpack, a lot of vol going the way of the dodo. So let's start there. Mr. Rock Lobster, you were right. You were just off by a week, because last week, this time, you were talking about a 15 handle on the show. Of course, last week we had that unexpected sell-off, sent vol all shooting in the other direction. But now, give it a week, Mr. Rock Lobster, and vol circled back to you. That has to put a smile on the face of Volmancer.
It does. That is one of the good thing about options is there are many moving parts to options. There's the vol moves, the price moves, and time to expiration moves. So, you buy enough duration, you can get away with almost anything. So even a temporary jaunt up to 30, up to 35 for VXX for a little bit, and VIX traded 21, 22, something like that. So it was a temporary it was the shortest taper tantrum in history, I think. 2 days. And then the Fed got fraidy catty and crawled back into their holes and said, we'll deal with it later. Again, kicking the ball once more down, kicking everything down the curve, I guess you could say.
Well, I can say that, and I will say that. But before I say more, Mr. Rock Lobster, aside from the short-lived taper tantrum, as you call it, from last week, what else is lighting up your tape and catching the eye of Volman this week, sir?
Well, I think you hit on a couple of interesting points. That we could see another closing low for VIX in the COVID era, I call it, as this is still a vol event in my view. It's becoming less of one, but it's still there. So you got that. Normally, when we've gotten around these lows, VIX has bounced right back up again pretty sharply because of something else, right? So that is significant. VVIX, I believe, is it south of 100 right now for reals? Let me take a look.
It was 105 coming into showtime, so not quite there yet.
105. Okay, yeah, it's a little lower than that. I am looking at live vol and the what I just call the sigmas. The average vols for VIX in July and August are now below 100. So You have to, like, I guess VVIX, because that's their own, using their vol calculation, so it's going to skew those upside a little bit more. But as of right now, like I'm seeing sub 100 for the first time, like real serious drop in vol. I do own some vol puts, and they haven't moved a whole lot today. And interest, like the 14 puts for a dime, they're only $1 out of the money. They're a dime. 14 and a half puts, 15, 20.
Isn't that crazy? We're talking like about 14 puts, and it's a rational thing to talk about, right?
I know.
How long ago we were, can it break 20? Oh my God. And now we're talking 14 puts.
Right. Oh yeah, 100%. Like, very surprising. Like, I own some of the 18s. Like, I might sell some 15s against my 18s, which would bring the cost down significantly. So I'm not going to, but just in case, you never know. But I mean, we're at 15 now, and there again, there is that volume is starting to build a little bit. The 15 puts volume. What's weird is I've been buying those junk puts. Well, my old junk put was the 16. In the last couple cycles, they paid pretty well, as long as you sold them when you had the chance. And the 16 puts now are the most I've seen at this point in the cycle. So people are buying puts of all. Like, what's starting to get interesting to me, like the 18, right? The 17 puts in August are $1.10. That kind of trade starts to get me very, very interested. Like the long strangle type trade here. You can buy the August 17 puts for $1.10. You can buy the August 20-30 call spread. Where is that trading? You can buy the August 20-30 call spread for $1.50. And you can buy the 17. So that's you're paying about $2.60, and there is $1.60 of intrinsic value on that strike. So the option prices are starting to get relatively inexpensive as well. Those are basically how I kind of gauge how much stuff costs, essentially. Right now, that the price of that particular strangle is about as low as it's been. Maybe actually this is a new low for an in the money strangle like that for VIX. So prices are getting down there. Like the fact that you could actually buy a 20-30 call spread and pay only $1 and change for it. That's a cycle that's almost 2 full cycles away. Like, the prices are definitely getting down there.
You can still sell those 30s. You can still sell those 30s for $1.25. There's still some meat on that upside. That's impressive.
Exactly.
I was not expecting that much juice to the upside there.
That's the thing. Like, the at the money's dropping to the 90s, and the upside vol for those type of options, they just keep going up and up and up. They're kind of like upside calls in AMC. They're never the liquidity.
Yeah, I was going to say, it seems like the meme kids are starting to discover VIX. They're bidding up this upside nicely.
So I think that's, to me, that's the trade in VIX. You buy the cheap stuff near the money, and you sell all the stuff out of the money, and you watch it move. And when it moves, you sell the stuff that makes money. So you try not to make it, too difficult on yourself. But yeah, like 17 puts for $1.10 in August are ridiculously low. Crazy low, actually. And then this is, again, I look at where they're trading now. Let's say where they are by Monday, Tuesday. See if they actually take the vol down a little more, because, as VIX, the way VIX works, it kind of is skew in reverse. Vol goes down, at the money vol goes down with it, and the upside vol goes up. So the lower it gets, the more interesting and cheaper prices relative all that stuff becomes around the money. And I think that's what we find. We're starting to see, like, what I would say normal, meaning the other 15 years that VIX has traded, a little bit more normal vol patterns. When because remember, like, when we would get to 16 vol before, like in the COVID, if you look at vol, it never got that cheap. Like, it was rare that they really took the vol down hard. like they're doing now. So somebody is selling something, and at least the liquidity providers are pulling back a little bit on the bid, or they have the opportunity to pull back on the bid. So, hey, you have to take that as a signal. If they're getting out of the way, vol's going lower. So at this point, I'm just watching it and see how low it goes, and put some offers out for some puts and move along, and hopefully we see the 14 handle today. I think it's possible, but nothing like having the market only move 20 basis points to get vol down there.
See, this is why doing the show with you is dangerous, because now I'm distracted pricing up all these verticals and flies to the upside in VIX, and you're distracting me from the show, sir. So I need to put that.
To go back to trading.
Yes, I need to put that screen aside, because I'm doing all these shows for you folks all the time. I don't have time to price up all this juice, even though sometimes it is attractive out here. You know what else is attractive out here is all things going on in the vol products. Let's get on out now to the place where the answer to all of your questions about volatility, it lies somewhere on this vol surface. You just have to find it. You have to ferret it out. It is the needle in the haystack. Of course, I'm talking about the VIX futures curve, and no surprise, coming into Showtime, we're seeing that curve down a wee bit since last week. Come into Showtime, we had the July future down over 2.5 handles, about 2.6 points from where it was at this time last week. The AUG future down nearly a full 2 points, 1.8 points there as well. Even out to SEP, they squeezed out about 1.5 points out there as well. So as you might expect, vol coming off yet again, and also out there in the front portion of the futures curve, Mr. Rock Lobster, what is catching your eye out there in the answer to all vol questions, aka the VIX term structure, sir?
You like that? I think that's that's one of the guys that was asking about what do I look at. I just look at the term structure. I don't look at anything else anymore. After trading for all this time, I've distilled it to what the market wants to pay and how steeply sloped the forward vol is, and you can get lots of information there, right? Especially what you like to buy and sell. But so right now, what do we have? So this is, again, a very interesting part of the vol space, because VXX and UVXY, they own a lot of futures, and the shorter term vol is diving relatively fast, which pushes up forward vol for the back month. And so now those, VIX and VXX, or VXX and UVXY, they got to buy those futures in August. And as the VIX dives, the short end of the curve dives lower. Relatively, they're paying higher prices. So now you're looking at, wow, okay, there's like at least almost $1 of what I would call over fair value in July. That future's 18, still on the 18 handle. So that's a pretty good premium, especially when the market's not doing very much. So from now until the end of the July cycle, you have some interesting pricing. I have a theoretical low for UVXY at just below 23 from where it is currently. And VXX somewhere south of 26. So there's like plenty, because it owns those futures and they decay away. There's a lot of potential, even though we're down here. Also, like I said, those upside call spreads and stuff, if you want to buy like short-term protection, calls and flies and all that kind of short-term stuff, is super cheap. So it's a good part, an interesting part of the decay cycle once vol gets cheap, because you figure, VIX will go up again at some point, but how far down does it go in the meantime? So the curve is pretty steep, I would say right now. Lots of juice in the futures relative to where VIX cash is. And, it's Friday. You'll see a markup on VIX cash on Monday, but and the futures kind of, vol knows that. So now the big question is does the March keep going down next week? So I think the biggest surprise really was they got this infrastructure deal done relatively quickly, and it didn't cost $6 trillion. So I still don't know. Actually, one of the guys at Option Pit, Frank Gregory, knows a lot of Washington people, so he'll be writing about this weekend, so I can actually see what's in the deal. But it's like looks like a good old fashioned piece of government pork that makes everybody happy. And no surprise, they got together to spend money. So, and again, that creates less uncertainty, and less uncertainty generally means lower vol. And Powell pretty much like you said, I guess earlier this week, if the Fed's not going to job on anything for a month, right? That's 30 days where there's not going to be a lot of talk, right? So how aggressive does the liquidity provider want to be to keep the bid up if, we have a relatively quiet month ahead, especially if nobody is buying options. So we'll see how low VIX can go in the meantime. But yeah, from a curve point of view, everything is pointing toward continued annihilation of all products, but also, like we just said, that those upside call spreads and stuff like that, very, very inexpensive, very inexpensive spreads to trade.
So if you could only line up on one of those right now, the 14 puts, I think you were talking July. I'll give you out to August. So you want AUG 14 puts or the AUG 2030 vertical. Which one are you putting in your back pocket right now?
I would buy the 17. Did you say 17 puts or 14?
I was just going with the two you just said, the 2030 vertical or the 14 put. Now you're throwing the 17. Now you're gumming it all up over there. Okay.
Oh, no. I like the 17 puts for $1.10. I think those are very good. But yes, I would rather buy the 14 puts for a dime all day. Yeah,
probably. I was going to say that's kind of an easy one. I gave you a nice softball. Yeah. Instead, you threw in the 17s for some reason. But hey, whatever floats your boat. You want to pay 10 times more? Have at it. Let's see what's lighting it up out there right now across the board. In the world of volatility options, let's kick it off in spikes. The top positions here, the top 5 out here in spikes, looking pretty similar to what they were lighting up last week. Let's start at number 5. Number 5, we got the July 50s. Again, that 50 strike kind of capturing the imagination out there in spikes. And we've seen some 50s and above, 60s and others lighting it up out there in VIX as well. So if you thought 2030 was maybe a bridge too far, then how about the 50s? Number 4 in spikes, we got the 30 calls, so a 30-50 little vertical out there. Number 3, July 22s. Number 2, got the July 18 puts. And number 1, we got the July 16 puts. Those are all roughly the same size. You can kind of flip them around with any order, 1,000+ contracts out there. Whatever order floats your boat out there. But yeah, it looks like 18-16 put vertical versus some call verticals out there. Still the order of the day out there in spikes land. Let's move on out to VIX. And VIX was doing a lot of paper this time last week. Today, not so much. Only about 133,000 contracts on the tape today. So I guess, squeezing out 4.25 points over the course of the week. That's not enough to really drive any paper out there. Nothing really happening out there. 133,000 contracts on the tape right now. The ADV also taking a hit, down 51,000 contracts from last week, down to 485. So remember, not too long ago, we were saying, hey, we're back over 600K. All is rosy again with VIX. Well, that was very short-lived. 485,000 is the ADV out there. And even last week on the show, I was saying, a lot of these days are not really adding up to a ton of paper out here. So it seems like the ADV is going to trend in the other direction. And lo and behold, it did, listeners, pretty sharply. Before we break down this week's action, let's get out here to the top 10. Let's see what's open for size out here in VIX right now. And I use size in air quotes. So some of the bottom ones not as big. But still, these are the top 10 sizable open positions in VIX right now. Number 10, by the way, it is 60-40 puts to calls. That's been that way for pretty much the last 3 weeks. That hasn't changed. So that's still the case this week. Let's see if you can guess what the top 2 calls are out there. I bet you can. Number 10, 132,000 of the July 19 puts. Number 9, 133,000 of our first of 4 calls on the list. It is the SEP 30 calls. You like that, SEP 30s? We were just talking about the 2030 vertical. I definitely like that a heck of a lot better than straight up SEP 30s, but there are some other SEP calls open. We'll get to those in a little bit. Maybe some other verticals afoot there. Number 8, 157,000 of the July 15 puts. Number 7, $1.58 of the July 21 puts. Number 6, maybe the other side of a vertical there, 159,000 of the SEP 25 calls. Number 5, $1.68 of the July 18 puts, all the way up to number 4 before we cross 200K listeners. 229,000 of the July 17 puts are the number 4 position. Then, interesting. The top spot from last week getting knocked down a peg. Number 3. Notice I said number 3 are the July 40 calls with 282,000. Number 2 is the other side of that vertical, the July 25 calls with 311,000. So what has usurped that size July vertical, that size July 25-40 vertical we've been talking about and perhaps maligning a little bit over the last month and change? Well, it's actually some put action to the tune of the July 16 puts, lighting it up for 323,000 contracts. That is your number one sizable position out there in VIX land right now. Total of about 7.8 million contracts open, about 4.75 million on the calls, and a little over 3 million on the puts out there. So calls leading the dance again, net in the OI, which is kind of back to a more shade of normalcy type of VIX. Again, not a lot on the tape today, only 131,000 contracts on the tape today. So the most active contract out here are the July 15 puts with about 15,000 of those, followed by the July 24 calls, 12,000 of those. Number 3, 9,300 of the July 20s. Number 4, 9,000 almost exactly of the July 14 puts. And rounding out our top 5 most active options today, 8,500 of the July 25s. We'll run down the rest of the week here because there actually isn't a lot of paper on the tape this week. Then we'll pick the Rock Lobster's brain about it a little bit. Thursday, 372,000. I think you're starting to see why the ADV has shrunk so aggressively since our last show. 372,000 on the tape for Thursday. The most active contract was the AUG 30s. Back to that strike we were just talking about in that vertical. The AUG 30s, 47,000 of them trading yesterday, followed by number 2, about 30,000 of the July 17 puts. Number 3, 20,000 almost exactly of the SEP 17 puts. Number 4, 16,300 of the July 18 puts. And rounding out our top 5 most active options yesterday, almost 14,000 of the July 35 calls. Wednesday was the most active day of the week so far, and that's not really saying much. 391,000 contracts on the tape on Wednesday. The most active contract on Wednesday, 26K of the July 35s, followed by 21,000 of the July 21 calls. Number 3, 17,000 of the SEP 30s. Number 4, 15,900 of the July 17 puts. And number 5 was 15,700 of one of my favorite strikes on the list this week, the AUG 95s. I got to pull those up later to see. What are you getting for an AUG 95 out there in VIX land right now? Oh, nice hefty nickel at a dime out there. Let's hope they sold those for a nickel, just for the joy of it. It's ridiculous either way. If you buy them for 10 cents, it's absurd. If you sell them for a nickel, it's equally absurd because we have any sort of aggressive spike. Guess what? They're not going to be trading for a nickel. So that's going to come back to bite you very quickly. You got to hold it, obviously, to keep that whole juicy nickel. But still, either way, trading on that strike, pretty darn absurd. That's kind of shades of some of the stuff we're seeing out there in AMC right now. The 145 still trading up. You want more about that? Stay tuned for Options Oddities coming up a little bit later today for all of our pro members out there. On Tuesday, I should say. Tuesday, next, I wouldn't even say active because this is kind of a very light day. 233,000 contracts on the tape on Tuesday. Just a shade under 20,000 was our most active. That got you to the July 19 puts. Number 2, 16,600 of the AUG 15 puts. Number 3, 13,200 of the July 17 puts. Number 4, about 12,000 of the NOVE, our first NOVE on the list here, NOVE 20s. And rounding out the top 5 on Tuesday, almost 11,000 of the SEP 25 calls. It's like that SEP 25-35 vertical did trade about 11,000, 10,500 times or so on Tuesday. So that's probably where some of that OI came from. And Monday, 278,000 contracts on the tape. The most active contract, about 25,000 of the July 17 puts, followed by almost 25,000 as well for number 2 of the July 16 puts. So a bit of a roll, bit of a put vertical, call it what you will, going up for about 25,000 contracts for our most active trade there. Number 3, about 19,000 of the July 24 calls. Number 4, 14,000 of the July 20 puts. And rounding out the top 5 on Monday, 13,500 of the July 40 calls. Mr. Rock Lobster, that's a long way around to saying there wasn't a heck of a lot of paper on the tape this week in VIX land. A, does that surprise you? Because we had some vol movement this week, just not a lot of corresponding paper. And then B, of that small amount of paper, what, if anything, caught your eye this week, sir?
Well, VIX going down 50 cents a day every day for the week does not engender a lot of paper.
Apparently not. No one cares. That's nothing. That's a small move. 4 points in a week. We laugh at that.
Right. It's like it was pretty steady, a pretty steady drop all week. The only thing that's really caught my eye overall is just generally like they're starting to move a little bit more volume to the downside puts. Um, Really, we're looking at the new handle that's lower, that's a little hot, is the 14 handle. So there's been a little bit more volume there that we haven't seen in about a year, I guess. But that's about it as far as that goes. Yeah. So as far as we started the week, we did start the week with a bit of a pop in vol, and yeah, we were 21. I guess it is. I guess we did have a 6 point. Well, we had that huge drop Monday. When the sell-off did not materialize. Remember we opened a little, I think we opened a little down Monday, and that was the last we saw of the vol. So if you were long some calls and you didn't exit them, that was your only shot. So yeah, pretty much a 6 point move from Monday. But that's not the kind of, I think the hardest thing too was how the vol went down as well. Like, so we're looking at around a 120 average, and now it's 99. So, I mean, those are pretty hard drops in volatility. So even when you're buying options, you're kind of getting smoked. Even if you're buying puts, so the futures didn't move as much as the cash did. So again, looking at the big volume, I would say if anything, now that vol is lower, I expect to see more put paper come in next week in the July cycle.
We shall see. We shall see indeed. Maybe a little bit more paper on the tape than this week. Because, hey, 4 to 6 point drop in the VIX, that's not going to get you out of bed in the morning, right? Clearly not. Let's see what's going on out here. A little bit of a drop out there in our next product as well. Our old friend VXX, a.k.a. the product you folks love to fade, getting all that fade on this week. Down not quite 4 points, pretty darn close to it. Come into showtime was at 29.25. So we are aggressively through the 30 handle, Mr. Rockloff. So what did that take? A couple of weeks, not even a month. And VXX has shed 25% of its value, sir.
Yeah, Mark did a webinar 2 weeks ago on UVXY. And when it did the reverse split, he's like, he goes, you only get this opportunity once every 2 years. And UVXY was at the lows of the year. And he's like, you only get this opportunity because once they reverse split it, like the decay becomes relatively massive and the thing just dies. And that was, I think that UVXY was $40. So VXX, obviously it just did the same split. And it was $35 on Friday. Now it's $29. So, it's, the products are predictably crappy unless they change the makeup of them like they did with the UVXY, which probably now looks like a better deal because they won't have to shut the product down. So,
yeah.
But yes, these products, I love the fact that they have to keep splitting them, and they'll keep doing it and doing it and doing it. They'll list another one, and they'll do it again. So, but what's funny is every day the steady stream of buyers that look for the pop and vol, that sometimes takes a long time to come.
Yeah, if you're looking for the pop and vol, we said it many times, these products are not the ones to do it in. I mean, you can, but it's even more difficult. It's hard enough to catch the vol bid, as we've said many times, in a more direct play like VIX, because it's still so short-lived. Even out there, witness last week, right? It lasted all the way through Friday, and it'll maybe not even really much on Monday at all. You had to kind of get it on Friday pretty much. That was it. You had a brief window on Monday. That was really it. So that was with VIX. Now, if you have VXX, forget about it. You have all the other factors already working against you on top of the short-lived nature of the upside. So many people have written in of late, should I use VXX for the upside? Yeah, no. Just stay with the direct stuff. It's already hard enough with the direct stuff. Don't make your life harder. All right, let's go on out now. VXX, like we said, giving up the ghost. A good week to have some downside, some put verticals, some straight up puts, some put flies. Whatever you had on out there was a good week to have some of it out there in VXX land. 124,000 contracts on the tape. So a decent day, not a blow the doors off day out in VXX as well. That ADV has ticked back up. It's exactly up to 200K. So it seems like the erosion, the movement, and the symbology moving to the rear view mirror out there seems to have helped VXX get its footing again, at least from a volume perspective, not from a price perspective. Let's light it up out here, see what the top 10 positions. All right, looks like a good chunk of them are still pre-split adjusted because a lot of them are longer term. We still have some Jans here and everything else. Those aren't going away anytime soon out here. So let's do a top 5, tell you what, because bottom 5 are pretty much mostly VXX1, aka pre-split adjusted. Number 5 still out in the VXX1 though. We got 18,500 of the SEP 14 puts. Number 4, 20K, pretty much exactly, of the good old regular VXX July 28 puts. Number 3, 21,500 of the SEP 14 calls. Again, going back to the old school paper. In fact, all the top 3 are old school here. Number 2, 23,000 of the SEP 9 puts. And number 1 with a bullet still out there because some of our June obviously rolled off the board there are the SEP 10 calls, 32,500. That is still your biggest position out there in VXX right now, or in the legacy as well, VXX1. Total about 1.5 million contracts open, about 670,000 in the calls and 812,000 in the puts. Let's just hope some of those people in the calls are using it for fading purposes out there. Most active trades and options out there today in VXX, 11,500 of the June 30 puts. These are going out today, followed by half of that, 6,300 of the June 29 puts, also going out today. Number 3, we go out to Jan 30 calls, 5,000 of those going up today. Interesting. I did not expect to see that on my tape today. Followed by number 4, 3,800 of the June 29 halves, also going out today. And rounding out our top 5 in VXX today, kind of light, 3,300 of the July 30 calls. So a couple of 30 strikes lighting it up out there today. Mr. Rock Lobster, A, was that you buying all those 30s in Jan and July in VXX? And B, what else was lighting up your tape and the tape of your crazies in the pit chat in VXX this week, sir?
More of the same story. Lower vol. Actually, looking at January puts in VXX when I do some crazy stuff where you work out. Okay, well, if you're in contango, let's say for the whole year, how low can VXX go? So you do a calculation. You're like, okay, we're running around right now, which is a pretty juicy a melt, which is about $1 a week for VXX. And then what do we have? 25 trading weeks left. So that's $25 lower. So that puts VXX at, $1. So you go out and look at the Jan puts, and then you see how much volume is on the Jan 10 put, Jan 22 put. So, and the Jan 20 puts are $2.40 in UVXY. The 15 puts are only 70 cents. So right now the volume hasn't really climbed up in any of that stuff yet, but once people start to feel the itch, generally you'll start to see a little more volume. But there's a little bit of open interest out there, but not a lot of volume today. So, but most of the action has been like short-term put buying in VXX. That's the only thing really I've noticed of, at least this week. I haven't seen a whole lot of people trying to catch the falling VXX vol knife. Even if you look at like the July 23 cycle, so the July 23 weeklies, you're lucky if there's about 800 contracts for calls, which is pretty darn light. So, there's not a lot of, the good news is up to the July 23 67s, there's still a 16-cent bid for those with a month to go. So there is juice up there if you want it, but for the most part, it's been a quiet week from a volume point of view on the call side for sure.
By the way, Jan 10 puts in VXX still at a whopping dime, sir. So I haven't really budged that much, even though, like I said, we are getting that's a little bit more relevant than it was, let's say, a couple of weeks ago, sir. So there you go. Jan 10 puts still offered at a dime for everyone out there who was worried that they maybe missed the boat on all that juicy downside. That's a pretty aggressive clip getting to the 10 strike by Jan. But hey, we just did 4+ points in a week, right? So there we go. Just roll out a couple of weeks. We're already at the 15 strike, Mr. Rock Lobster.
Yeah. So a dime is cheap. What the heck?
So you heard it here first. Kids College Fund VXX Jan 10 puts for a dime. Buy them all up. I want to see that OI leaping off the board by this time next week. Let's see. I just had it up here, and of course, I closed it on myself. The OI on that strike is a whopping 1,800. I've got to be at least 10,000 by next week. Just our members alone can account for a couple of thousand of that. All right, so let's look out here. Let's look out to the product. Mr. Rock Lobster and the Meatball love to fade these days as well. And people have asked us which one's going to outpace to the downside. Look at this past week. We had VXX down 3 3/4 points from our last show. And UVXY come into Showtime is at about a 28, down 5.5 points from last show. So UVXY winning the downside race right now here. ADV still suffering, though, from that post-split symbology madness. It's at barely 100,000. It's down nearly 50,000 from this time last week. We've seen about 62,000 contracts going up today. So kind of a light day out there as well. Look really quickly. Let's break down the top positions in UVXY. Similar deal for this one. Let's just do a top 5 out here in UVXY as well. Number 5, they're also much smaller out here. There's only about 586,000 contracts outstanding. So roughly a third of what's open out there in VXX right now. Top 5, number 5, 7,100 of the July 20 puts. Number 4, 7,100 as well of the July 5 calls. These are the pre-split adjusted, obviously. Number 3, 7,800 of the June 28 puts going out today. Number 2, 7,900 of the SEP 5 calls. Again, back to UVXY1. And number 1 with a very small bullet out there, 9,900 of the Jan 1 puts, also pre-split adjusted, obviously. So those are interesting. Today's most active contracts out here, 5,200 of the July 20, actually the June 28s going out today, followed by 3,300 of the June 29 calls, also going out today, 3,000 of the July 45 calls. These are expiring on the 9th, so these are in the weeklies, followed by 2,600 of the June 30s and 2,300 of the June 28 puts. All the rest of that June going out today. Mr. Rock Lobster, you guys have said it before, you prefer UVXY right now to VXX. Certainly bearing fruit this week. What was lighting up your tape and the tape of your crazies in UVXY this week, sir?
How hard they crushed the ball. I bought some July 25 puts last week, looking for the July 16, 25, June, July 16, 25 puts. And they have not done very much even from the vol. So sometimes even when I get a little eager, I forget how much the vol can actually drop on them. So what's interesting now, I would say just like more at the money puts. That has been getting some action, as well as crazy enough, like some 20 puts in July. There's a little bit of action on there. So we have been looking at some of that stuff, and also you can see also from your list, it looks like there is a little bit more put love happening, but again, not a ton of paper again, just because vol's not doing very much. But I think the put side of the equation and the vol side of the equation now, like buying puts, is much more interesting in UVXY because they're just the vol's so much cheaper relative to the decay that you can get in the product. So it's a much more interesting risk reward profile now, I would say.
It is indeed. While you're talking, I bought some of those Jan 10 puts in VXX just to kick off the Palooza, sir. So let the fun begin here. I'll get the ball rolling, get that little snowball rolling downhill here, just for fun. We talked about those in the past, but just to get the juices flowing here during the show as we keep on rolling. A little bit of juice to be found, not much out there in the realm of earnings volatility this week. But then again, as we were talking with Russell on Twifo yesterday, we're about to just rotate the wheel back to the beginning again and back to some more good old juicy earnings results. So if you want some fresh earnings move results, and earnings season reports, you want to put this season behind you, I don't blame you. It's been a bit of a bloodbath for vol buyers across the board out there. Then stay tuned coming up for that. In the meantime, we still have some earnings move results, and earnings season reports hot off the presses from our friends over there at Orat's Land. We just broke down Darden's Restaurants and KB Home, their results reports on the option block yesterday. Let's look ahead really quickly. We talked also about FedEx and what do we got here? Nike coming off after the bell yesterday. Let's see how they fared. FedEx going into their announcement was $297 and about a third. They were pricing in a little over $14, about $14.20. And in the past, they've moved $20.50. And it looks like right now in today's session, they're down to $291.76. So they're down not even $6. So they priced in 14. They're down about 6. Yeah, that's a bit of a Volmageddon there. Not a lot of juice for that one. And then let's see here. Nike after the bell yesterday, they were at $133.10. They were pricing in $5.50. That was already cheap. Both of these were already cheap, but that was $14. They moved 20.5 in the past. So FedEx was pricing in a lot less juice, and surprise, surprise, they still underperformed. And Nike was pricing in $5.50. In the past, they've moved nearly $7.50. Let's see how Nike performed. They're at $133.10 going into the announcement. Oh, a little bit of shall we say, outperformance, Mr. Rock Lobster. Nike knocking the cover off the ball to keep the sports metaphor alive here. 153, up 20 points. So they priced in $5.50, listeners. They're up nearly 20 points right now. Wow, that's the first time we've seen that in a while here on the season. Clearly, Nike had some good sales. $50 billion sales outlook. They're calling it a monster announcement. Yes, that is, my goodness, that's a monster announcement. So there you go, listeners. Perhaps that is the one that will signal that the Vol Armageddon, the Vol apocalypse is done. Wow. That's why we say, you can have some of these and you hear that, the season's 72%, 75%, whatever it is, average. And people are, okay, lean short, right? Because that's a no-brainer. Then you have something like Nike come along and it does a 4X the straddle and it wipes out everything that you just made diligently selling throughout the entirety of the seasons. That's why we say it's the difficult dance, earnings volatility out there. Be judicious if you're trading it. Wow, that's a big one. Let's see if we can get something similar. It's going to be hard to match that. Let's go out to Bed Bath. Let's go beyond. Let's go to Bed Bath and Beyond. They're not popping off till the 30th. So they're pricing in $29.31. They're priced in $4.33, a little bit of extra juice. In the past, they've moved $4.05. But man, Nike knocking the cover off the ball. Mr. Rock Lobster, how many 150 calls in Nike did you have, sir? Because this thing just on fire.
It's funny. I was looking at that with one of my students yesterday, and he was looking at calendars for 50 cents. I'm like, well, the only way that calendar probably loses if the stock moves like $8 or more. And I was trying to remember the last time Nike moved more than $8 on earnings, and I couldn't really remember.
That would be today, sir.
I guess it is today. So I did correctly assess the risk of the calendar, but surprised that it moved so far.
Yeah, the old saying, when you can't remember the last time something happened, that means it's about the time to come. So we'll be judicious as we head on into a time that it's also good to be careful because we got to read your questions. It is time for the Vol voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemails, where you folks hit us up from across the volatility trading universe. Last week we had, or a couple weeks ago, we had Jim Carroll on the show, and he was tweeting out some stuff in between episodes, and so he had asked what we were trading. So I mentioned I had a VXX put fly I put on at the end of last week, and we were joking about how that was going to be a disaster because, Vol was, of course, destined to explode this week. That did not happen. The VXX put fly looked pretty good, so I took it off towards the end of this week. And someone out there follows him, UVXY trader. I wonder what he trades. He chimed in about the VXX put fly. He said he likes that. He said, pair that VXX put fly with a call fly. Make your wings on that call fly 3 to 4 weeks out, and they keep rolling the short straddle. Obviously, he means the short guts component of it. He said, and then you've discovered my secret trade. He calls it the double butter churn. He says, I'm serious, but I'm not sharing more because it's too complex. So there you go. The double butter churn. So let me see if I have that correct. You buy a put fly and a call fly. in VXX. You make the wings 3 to 4 weeks out, so more expensive. You keep the short guts component, I guess, front week, depending on how he describes it. And now you have this double butter churn, Mr. Rock Lobster. What do you think of that? 2 flies in different directions in VXX with the guts kind of front and center, and then the wings a little bit farther out, sir.
I would have to say that's pretty clever, because you got, let's say, he's buying the wings 3 to 4 weeks out. So usually with the Vol products, you're holding that long put wing. You buy it for pretty much nothing right now. And then, as time turns through, like the value of your strangle that you're long in the way out there, it slowly is worth more money, because that put becomes worth more money, right? And then he's selling the juice, the straddle juice, because again, like especially in contango, everything just kind of melts. So I can see how he does that. And then you just keep rolling the trade, right? You close whatever you get for the short strangle, and then you sell a new weekly one against your strangle. And at some point, he probably just balances the trade. But it's kind of a cool concept. He probably doesn't do it in backwardation, but in contango, and you've got that upside call. So at least you have some sort of protection relatively. It's a trade that you can close even if if things blow up. So it's kind of cool.
Yeah, I don't hate it. The name needs some work though. The name, let's just toss that outside. That double buttered, I'm not behind that at all. We could do better than that, Mr. UVXY trader here. But yeah, the strategy I don't hate. The name, that's another story. All right, next up we've got Mr. Unlimited, one of our pro members there in the chat, says, everyone likes your vertical, Mr. Lobster. He says, I like your 2030 vertical. He's talking about the VIX vertical we were talking about earlier. But he says, but I like it for September. Is it too early to pull the trigger on those? They're going for around $1.85. So Mr. Rock Lobster, he likes your VIX vertical just out a month. What do you think about pushing it out a little bit farther and paying, a little bit more for it?
I generally don't trade VIX past the second term, just because they never move. I mean, all the action is in the front 2 terms.
I was gonna say, what's your favorite saying? Like kissing your sister? That's once you get a little bit farther out there, it's not that exciting in VIX land.
Exactly. So I'm not a fan of that. It might work for you, but you sit there and you watch it. And the ball goes up, and you watch it, and the ball goes up, and you watch it, and the ball goes. It just doesn't go anywhere. And unless we go to 90 vol or something, right? And then even then, when it goes to a 90 vol, VIX goes to 90. You paid $1.85 for it, and the spread is still only worth about $5.50. So it depends on I would like to, if I'm going to buy options, I want to have that I want to have that accelerated kind of gamma style move. I want things really to rip. So that 3-month cycle in VIX normally doesn't do it. I think there's more interesting ways to do it.
Yeah, I see where you're coming from, Mr. Unlimited. I think we've all been there. You're looking at something out there in a VIX, and you say, I kind of like this. I might buy this. Then you say, if I go out another month or a few weeks or whatever, it's only a dime or 20 cents more. Why wouldn't I do that? And you get caught up in that, and then you start afterwards. You put it on, and you're like, wait a minute, I should never have done this. I don't think every time I've done that, which has only been a few times, I don't think I've ever been happy with the results. So I get it. It seems attractive. It seems like a deal. You get all this extra time for not much more money at all, and yet all the reasons we just described. Remember, you're going out farther on the futures curve, different underlying to worry about. Is that going to move as much? Probably not. So you're getting more time, but not really a lot of bang for your buck for that extra. You're going to buy it and be like, wow, this, as Rock Lobster said, it didn't really move at all. So you probably wouldn't be happy. I know it sounds counterintuitive. You want to get as much time as you can for as little as you possibly can pay for it if you're buying options. But in this sense, kind of keep it to the nearer port. Look at all the futures we're always talking about, right? Where's all the action? Always in that front portion of the curve. So stay around that portion, especially if you're buying options. You want to get that bang for your buck. And let's see if we got any bang for our buck this week. Spoiler alert, I don't think so. As we move on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Let's do it. Let's see where we're hanging out right now. It does seem like, let's see here. Well, NASDAQ sell-off has increased a little bit. It's off about 0.1% now from where it was at the start of the show, kind of basically unched a little bit to the downside. Dow up about 0.75 points. That's about where it was at the start of the show. S&P up about 1/3 of a percentage points. That's roughly where it was at the start of the show as well. So it's not like the worm turned across the board out here. It does seem like vol has pretty much hung out where it was pretty much at the start of the show for the entire show. Spike's still at about 15.25, actually about 15.33 or so right now. So pretty much right around where it was at the start of the show. Same thing for VIX Cash. Ticked up a little bit. It's at about 15.40 or so right now, from about 15.25 at the start of the show, but still pretty much right where it was at the start of the show. That means pretty much all of us across the board were not winner chicken dinner this week. Last week we had Saad joining us from Vesica, and he was the upside. He played the Russell Rhodes role last week, as in he bought all the upside. He had an 18.5 coming into today, which was not there, with 3 points plus shy of that. I was coming in next. I was at about a 17.75, so obviously that was lower than we were this time last week, but not low enough to make it for this week. Mr. Meatball was at a 16.86. He says he was fading his position this time, but not so much this week either. So pretty much all of us are in the losers column. The closest was the Meatball, and he was still about almost 1.5 points away. So not a bullseye week for us this week. But again, we had some dramatic swings. Remember, this time last week, we were in the middle of the teeth of the sell-off, and the whole question was, what the hell is going to happen on Monday, right? Are we going to open pretty much selling off again and the vol is going to keep spiking, or is it going to be kind of and the vol is going to come crashing down? Of course, it was the latter. But again, that's why it was a difficult week to be prognosticating vol. Mr. Rock Lobster, you were lucky. You were not here last week. It was a difficult one. That also means you get the joy of going first this week. Tell you what, I will be kind. I will allow you to choose whether you want to go first or go last, sir.
I'll go first. I'll go first.
Oh, bravely venturing into the void, sir. How about it?
Yeah, that way you have the opportunity to scum me as you normally do. So I will
just for fun.
I think vol will. I think we're going to see a low tick for vol this week, but probably ends up a little higher by the end of the week. So where are we now? 15.30. I'm going to say 15.65 by the end of the week.
15.65, you said? Okay, I think we can make that happen. 15.65. So kind of where we are right now, a couple of ticks higher than we were this time last week. Oh yeah, our friend Mr. Unlimited, who likes himself the vertical. He also likes Columbus because he's coming in at a 14.92 for this time next week. If you guys have your guesses, hit us up. Let us know. Maybe we'll have some fun prizes associated. Right now, it's just for bragging rights, but maybe eventually. We do that year-end one, and we have had some folks win, including Neil Wales. He won himself some access to some of our plus stuff out there a little bit because he had such a ridiculous guess. You got VIX for the year almost exactly right, which is nigh on impossible to do. So I don't think he's joining us live because I think he's overseas and somewhere over there in Australia. Interesting stuff afoot. So if you have guesses, hit us up. You never know what kind of prizes might be coming your way. So Rock Lobster 1562. Meatball feeling less 14 handle this time next week. Usually I do feel a little bit less vol. I'm kind of on the uncertain tip this week as well. We have, your 14 puts, I was joking with you, but there is a chance those could become relevant. I just don't feel it for this time next week. We got all these things lurking out here. It seems like there's another Fed governor or someone waiting in the wings to just spark another sell-off, or maybe Yellen's going to come out and say something else dire, or some of this Delta variant news may kick off. Something I think is going to intrude on us midweek and get vol juiced up a little bit again. So the question then is how much of that persists through Friday. So I'm going to say this time next week, I joked about scumming you, but I'm actually going to go higher, Mr. Rock Lobster. I'm going to say 16.05 for me out there. So that's my market, 16.05. Mr. Rock Lobster below me at 15.65. You have your guess? Hit us up. Let us know as we keep on rolling. It's time unfortunately, to bring our vol journey to a close. There it is. There's that music. But if you're saying to yourself, I need a little bit more. I need a little bit more of these guys in my lives this week. I'm not quite done. Well, you're in luck, because if you're one of our pro members, you got a nice little break, go have a beverage, hit the bathroom or stuff, and then come back in exactly an hour. And guess what? The Rock Lobster's diving into the fray as well. So you get a second dose of the Rock Lobster this week. We're going to dive into all the fun on options oddities. But that's only for our pro folks. For the rest of you, this will be the end of your Options Insider Radio Network journey for this week. So if you listen to this after the fact, Mr. Rock Lobster, for those folks who, for some reason, haven't yet jumped into the pro fray with us, where can they go to find out more about all the fun stuff you're cooking up in the land of the pit, sir?
We'll jump on over to optionpit.com, go to memberships. We also have courses if you want to just have my VIX Made Easy course and VXX Made Easy course. So if you want to just learn how those products work, ways to trade them, go check it out. And for, what do they cost? Like $297. It'll save you that much money. I would predict very, very quickly. So give those things a try. Go optionpit.com.
There you go. Optionpit.com is the place to go. You got Mr. Limited in the chat saying, that's why I pay for pro. You guys just saved me a bunch of money. Yeah, so if you want to tune into this stuff throughout the week and get all the extra bonus stuff, the pro Q&As alone. I mean, I love the Rock Lobster joining me on Oddities. That show's been fantastic. I think just the pro Q&As alone, just the questions you guys have been asking, the quality of the answers and the guests you guys have been had access to on the pro Q&As alone, those have been amazing. We got another great one. I won't spoil it yet. We got another great one coming up. Let's just say a legend in the game and put a legend on the network as well, from the early days of the network as well. So it's going to be a fun one on Tuesday. Start getting your, let me just put it out there, maybe some short volatility themed questions ready for our pro Q&A on Tuesday. That's all the hint I'm giving you out there. But we got a good one lined up. And of course, we got Options Oddities coming up in a little bit, so we got to get ready for that. So we'll be back for that. If you're listening pro, you can enjoy that. If you're listening on demand after the fact, of course, at the end of our broadcast week, have a great weekend. We'll see you back here next week, kicking things off on Monday with the option block, all the way through to another Friday, another episode of Volatility Views.
Volatility Views is brought to you by MyAx, one of the fastest, most efficient trading platforms in the world. MyAx is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available on the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.